Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at Manhattan supply at 62.26 going down. Show me that chart.
That's right, Noah. And I might sound like a broken record here, but we have been going down in supply for the last. It's been quite a while since we've seen an uptick in supply. But generally speaking,
it's been a number of weeks, John. It's got you left speechless there. We don't know exactly how many.
Seriously, the trend is down.
It's been going down probably since last September or October, maybe even going back that far. But I hear exactly what you're saying. Let's move on. Maybe the weeklies will tell a clue on why that's happening. Let's move on to Manhattan demand. Pending sales, 51.16. It looks like that's inching ever so closely to the 5 handle again. But Johnny, show me that chart.
Yeah, and this one's inching down too, but just not as much as supply. And that's really the crux of the issue here, which is we're seeing supply decrease faster than pending sales are going down.
Yeah, and that's why this market pulse right over here is lingering higher, is because demand is hanging on and inventory is kind of falling at a faster clip. And as a result, the leverage in the market is kind of sustaining itself on the sell side. It's not really kind of coming down as buyers would hope. Maybe the next listing season after Labor Day will disrupt that trend, but that's what it is for now. Let's go to the weeklies and see if there's any clue there. Johnny, I'm looking at 1 week supply, 255 things came on the market. That looks like it's down. Show me the chart.
It is down. That's almost down. That's like a big number down. It's like down 10% from last week. And last week was 282, which wasn't really high to begin with. So it seems like either summer vacation has really started in earnest, or the supply side is just not terribly interested right here.
Yeah, and it's a couple of weeks from listing season, so I got to expect this to continue until after Labor Day, and then we'll start to see that pick up. But it is what it is. Let's go on to the measure of demand. 1 week, oh my goodness, 246 deals. It's down, John, but it's still at a high level. Show me that chart.
It's down. It's down nearly 20%, which is a big drop from the week before, which is over 300. But let's put this into context here. It's 246. That's only a fewer than supply that came on during the week. And 246 is still a pretty impressive number of contracts to be doing, especially for a late August week.
Yeah, I mean, we usually in normal times, if I can go back to saying normal times, this is pre-2020, obviously, because after that, everything was not normal. We would see about 1,000, 1,100 deals in our most active seasons, in our most active months. And I mean, that means 250, 260, 270 a week. That would be like kind of where it is. The fact that we're in August and we're going into the weakest month of September for deal volume, and we're still at that level, just goes to show you we are down relative from a few months ago. No one's denying that, but we're just above normal. And we'll show you that as we go on a little bit later, John. I want to first move out of UrbanDigs and go into one of our 2 charts that we have you for our bonus Friday chart edition here. And this is Manhattan negotiability at the time of the deal. We always like to do this and keep you posted. And what I want to point out is that June has got a number of deals in there that's good. I mean, so there's a lot of data in that June bucket. We can probably count on that. And you could see that we did, in fact, kind of tick up just a little bit from that trend. And when I look at July, which is early, right? I mean, just admit, these are deals signed in July that also closed and Acris filed them. So it's quite early. Usually these early looks get to be very high discounts because that's like the cash discount, but not so this time. So I don't know what that means, John.
Well, I'll tell you what it means, Noah. This is interesting. We've talked about it before, and it's a really cool facet about what's happening in a hot market. And it's those July bars that I'm focused on. They're early and they're low. And why are they low? Simply because it used to be that when the market's sort of in a quote unquote normal market, or a sort of more of a buyer's market, those early bars are going to be really high because you're offering a cash discount to a seller who's sort of captive, and they're going to take it. They're going to offer you a discount. Right now, what we're seeing is if you get in early and you go cash, you're basically paying a premium to get that space because the inventory is so tight that you're having to pay a premium just to get it. And that's what I think we're seeing here. And what's notable is I think as this month progresses, I think we're going to see those bars go down even farther.
It's really very, very interesting. For those of you counting track at home, I would just put the negotiability rate right now at about 4%. And figure like what 2.5%, 3% is going to be a negotiation, and that 1% or so is going to be a price reduction. That's kind of where the market is. That's the most data I have that I can pass on to you with confidence about where we are right now. And I want to end today and showing you our follow the spread chart here, guys, I want to explain what we're looking at here. We are looking at, the black line is looking at monthly contract signed, how many deals we actually booked every month going way back to 2015. Okay, so you can see that. It's obviously seasonal. And then the orange line is going to be the 10-year historical average of what we're supposed to print for that month. And here's what that chart looks like. And I don't want to just overlay something here. I put a little bunch of pictures here that didn't actually work. There should have been something here, but there's not. But look at the spread, right? Look at the spread over here between these guys when the market hit COVID. That was the underperformance, showing you how much lower we actually went below the averages. And once that spread started to narrow and then cross and change right over here, that was your recovery signal, right? Right around there is your recovery signal of this market coming back. So now when I look at it, look at the spread on the upside right over here, you could see that we're actually starting to narrow a little bit on that spread right over here. We're both going down. Booked deals is going down. Monthly is historical average is actually going down because September is our weakest month, but we're still well above that trend. And that's the point I want to make, is that even though we are down, we're still so far above historical average.
Yeah, and that's a great point, Noah. And I just want to point out that these are liquidity-based signals. And this is one of the things that we've been talking about for a while. There's a difference between a price action signal and a liquidity signal. This is a pure liquidity signal in which we're basically suggesting that, there was no liquidity. Then the liquidity spikes up. When was that? What was that? November, October, November. You see that the actual liquidity in the market surpassing the average. And these are the kind of signals that from a negotiation, from a leverage point, they're really important to pay attention to.
Yeah, and it also lets you know. I mean, guys, you got to keep in mind we're supposed to be close. Like these lines should be near each other. You should see a market that's historically trading near its normal times. And if you go back to 2015, you could see that we were above. We were above, right? That's above. The black line's above the orange line. So that kind of shows that. But when the 2016 policy-driven reset, look, below. Everything is below here. So like, it's a really good indicator of where we are and what's happening relative at the moment. And again, the signal right here for the extremes, you can't find a better chart to kind of show the extreme levels that this market has gone through on the downside and on the upside in terms of liquidity. John, you nailed it with liquidity. This is not price action. Thank you, John Walker, for bringing up all this data. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, if you guys got questions, we got answers. Please visit our forum right down here. Other than that, we wish you a great weekend, and we'll catch you next time.